Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are entering June and the equity markets are still in an uptrend. This uptrend is a little bit choppy, but still the market keeps recovering, keeps pushing higher. So the levels I would watch is on the S&P 500. If it stays above that 50-day moving average, if we don't see too many closes below that, continues moving up, we're in an uptrend. That level would be right now be about 2100. Same with the NASDAQ. The NASDAQ's pretty much above that 5,000 level, holding above that level. Right now, that's where its 50-day moving average is. And as long as the NASDAQ stays above that, equity markets are still in an uptrend. And as this uptrend continues, we can continue to see strength in the same sectors I've talked about for weeks now. That's specifically the semiconductor stocks, a lot of other technology stocks, and of course the medical sector. A lot of strength still in the biotechs, the managed care space, and drug stocks. And speaking of that, one of the sort of biotech stocks we're starting to accumulate now and looking at is called Illumina. The symbol is ILMN. And basically, they're a gene sequencing company and they provide genomic research for all the other biotech companies. Here's why we like them. For the last 3 quarters, their basically average earnings per share has been about 78%. Their average revenue has been in the 30% range. And so the company has some very strong numbers and it's growing. In 2013, it had about a 200% rise, and since it's been consolidating since then. It's had a lot of trouble getting through the 200 level. It keeps forming bases on bases, keeps falling down to about that 180 level. However, over the last few weeks, we've seen a lot of strong action on the right side of its base. It's been up 5 weeks in a row on good volume. And it's been trading for the last 2 weeks above the 200 level. That was a lot of resistance right there. And if you look on the chart, you'll see back in January, it formed a high at about 214, actually 213 and a half. So we're looking to see if it can take this out on volume. That'd be your pivot point. You know, like I said, we're cheating in a little bit here, but if it takes out that pivot point of about 213 and a half on strong volume, the stock may have a lot more room to run. Has a strong return on equity of 27%. Forward-looking estimates are very strong in the 25% range on revenue and earnings. So, as always, consult your financial advisor to see if this trades for you. It might not be for everybody, so just take a look at that. And also, as always, let price and volume be your guide. This is George Tkaczuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Good luck.